Welcome, welcome everyone. I'll give a little intro in case anyone else is still joining, but thank you so much for joining us tonight. We are representing Great Expectations College Prep. We have Joyce Smith here for you tonight. Joyce is an excellent financial aid resource for us. She's got a great presentation prepared to walk you through a bit of the process and give you a little background on what is to come with financial aid. Joyce works with us here at Great Expectations. She's got a degree from Connecticut College and a master's in education from Harvard and a college counseling certificate from UC San Diego. She's been in the industry for over 20 years, has a broad knowledge of the financial aid process, and is here to share some of that with you. We've got questions that were sent in advance. Joyce has that with her, and if it's not addressed throughout the presentation, she's got notes and we'll make sure to do that at the end. I will be taking note of any questions that come in. Please feel free to submit any questions on the Q&A here on the webinar, and I'll make note of that and help Joyce with that at the end or answer anything that I can along the way. I think with that, I'm going to mute and I will turn it over to Joyce. Thank you.
Hello, good evening, everybody. I'm so pleased to be here and give everybody a little familiarity with financial aid, the process, some of the terms that are being used, some of the definitions. So we all know that college does cost money. In fact, in many instances, it costs a lot of money. And there are ways to get some money, some help in being able to cover those costs. And one of the things that I want to go over is the definition of cost of attendance first. A lot of colleges may include different things. Most of the colleges now will include in their cost of attendance, not only tuition, but miscellaneous campus fees, room and board, books and supplies, personal expenses, and transportation. And when you get your personalized financial aid package, the college will insert the proper figure for transportation if you're close to the college or you're flying in from 3,000 miles away. They do that. If not, you need to take that into consideration. But the missing piece in most times when colleges put together their cost of attendance, they don't include health insurance, which is a little strange since every college and university requires that every student have health insurance. So if you are under your parents' health plan, you need to, ask them to look in and see if you would be covered if you went to school out of state. Now, I forgot to mention that all through this webinar is that most of it is going to be geared toward current high school seniors, but there is a lot of information that is relevant to high school freshmen, sophomore, juniors, and their parents. And one of them is the health insurance. You should investigate to see if the student is interested in attending college outside of California, if they would be covered. If you do not have health insurance or you have Medi-Cal, you will need to buy the college or university's own health insurance or get a waiver. Getting a waiver is a little risky because that means that you're uninsured far away at school. But you can get waivers and just have your student covered for emergencies. Now, college university health insurance that they support can be as much as $2,500 to $4,000 a year. And why is this important? Because if it's not included in the cost of attendance, then you need to be prepared to add that cost of health insurance on top of whatever you owe after financial aid. And I have an example of that later on. But I wanted to go over these costs because it's important to know what the colleges are looking at in terms of total cost for attendance per year. And it's important because one of the things that what they will look at in order to determine the financial aid offer you might get is your family's demonstrated need. And they calculate the demonstrated need by taking the student aid index, which used to be called the estimated family contribution, which is a figure that is calculated after you submit the financial aid application, normally, referred to as FAFSA, which I will explain in a minute. So you take the cost of attendance. Let's say in this example, the total cost of attendance is $50,000. The student aid index came back that the family would contribute $10,000, which means that the demonstrated need is $40,000. So again, why is this important? Because colleges will say that they cover a certain percentage of demonstrated need. There's also no guarantee that they will cover 100% of the demonstrated need. However, there are some schools that meet 100% demonstrated need. And here's a list of those schools that meet 100% demonstrated need with a financial aid package that does include student loans. Now, this is just a list. The list changes all the time when more colleges come on board. I've highlighted the colleges in California that do meet 100% demonstrated need with the loans. Now, there are a small handful of colleges that meet 100% demonstrated need without loans. These are colleges that are committed to having their students graduate debt-free. The University of California, actually, I just heard today at a conference, they have a goal of having their students be debt-free, graduate debt-free by 2030. So here's the nitty-gritty about financial aid. Their financial aid refers to both merit aid and need-based aid. Merit aid can be both scholarships based on the student's academic, artistic, or athletic merit. And it also can include discounts on the cost of attendance that colleges will give to further attract students that they want. So this means that sometimes scholarships are awarded based on the student's college application alone, without a separate application. But many will require the free application for federal student aid, which is something that we'll get to in just a second. So here's another list of colleges that give merit aid to a majority of attending students. You will see that some of these colleges you may not are not as well known as others. And that's because what they're doing is that they're trying to attract good students and students that they want on their campus. This is a list of colleges that do not give merit aid, but they will include discounts in their cost of attendance. And you will note that I have bolded that the Ivy Leagues do not give merit aid. I'll give you a little time, about that. So need-based aid is the money that either the federal or state government or the college university gives as a grant. If it comes as a grant, you do not have to pay that back. Or they offer federal loans, which you do have to pay back, and we'll get to that in a minute. Or they offer work study. And these are campus jobs that both the college and the federal government support. So grants, federal grants is the federal Pell Grant. The maximum amount that it was awarded this past year is $6,895. You can get more information about the federal Pell Grant at studentaid.gov. U.S. citizens and permanent residents are eligible to receive a federal Pell Grant. If the family income is less than $30,000, you would receive the full amount. If the family income is $30,000 to $60,000, you will receive some percentage of that full amount for that year. There's also in California called the Cal Grant, which is for California residents, permanent citizens, and qualified undocumented students are eligible to receive this. This is, again, you get these grants by filling out the FAFSA form. The amount depends on the student's GPA and the type of college attending. So if you attend a California public university, the maximum is you could get is over $14,000. If you attend a California private college, the maximum is almost $11,000. And if you go to a California technical school, again, the maximum is close to $10,000. Cal grants aren't transferable to colleges outside of California. Loans, there's no income cutoff to qualify for student or parent loans. There are two types of loans. There's a federal direct student loan, which has an interest rate of 4.99%. There's a subsidized direct student loan, which means that the interest is paid by the government while the student is in college. The unsubsidized direct student loans, the interest accrues during those 4 years that the student is in college. However, both these loans, the repayment starts 6 months after graduation. There's also a Federal Plus loan for parents, but that interest rate is higher, 7.54%, and the loan repayment starts immediately. So as soon as you get the loan, your monthly payments will begin. The annual federal loan limits with loans, they increase every year. So for freshman year, the limit is $5,500, sophomore $6,500, and the third year and beyond is $7,500 a year. They do not want you to graduate with more than an aggregate of subsidized and unsubsidized loans that equal more than $31,000. And you don't have to take, even if you're awarded a loan in your financial aid package, you don't have to take the whole amount. You can take what you feel you need. The Federal Work Study Program is for students with financial need. The college and university pays half a student's salary and the feds pay the other half. The institution will determine the number of hours you work, and you're paid at least at the federal minimum wage. And the student reports this income on the student's own income tax return. So how do you get any of this money? Well, you get it by filling out the free application for federal student aid. Again, this is just for the federal aid. So this is for Pell Grants, Cal Grants, merit grants, and federal loans. Only citizens or U.S. permanent residents can use the FAFSA. This will open up and available online on October 1st. It is only available at studentaid.gov. Now, this is important to know, is that a lot of times you may start getting emails from organizations or agencies saying, fill out the FAFSA here, and they will say that it's FAFSA.com or .org. Only .gov is the real federal application form. Undocumented residents fill out the California DREAM Act application for the Cal Grant. And that you can get at dream.csac.ca.gov. So one of the things that you may start hearing gets confusing is that what kind of income information is this application looking for? And you may hear a term called prior income tax. Well, what that means is, for instance, the current seniors will complete the 2023-24 FAFSA using information from the students and the parents' submitted 2021 income tax return. So not this year. So 2021 is the prior year. And if parents are separated or divorced, only the parent that the student lives with more than 50% of the time will fill out the FAFSA. Now, if parents have 50-50 custody, the parent who provided most financial support in the last 12 months fills the FAFSA out. So even though it's going to be, you're using information for the 2021 income tax return, parents that have 50-50 custody, only one parent fills it out who has provided the most financial support in the last 12 months from when you're filling out the FAFSA. So if you're filling out the FAFSA on October 1, it would be, well, the last 12 months between October 1, 2022 to 2021. It's a little confusing, but that's the deal. The other thing that the application asks for is information about the student and parent assets, and assets are cash or investments. And they're asking about the value, how much the assets are worth that the student has and the parent has as of the day you complete the FAFSA, not as of 2021. Again, a little confusion. So these are the assets that you need to report: is how much cash you have on hand, how much is in your checking account, in your savings account, how much do you have CDs? If you have some of 529 College Savings Bank, what's the balance in that? That's an asset. I can give you a little time to look at that. What is not considered an asset for the federal application is qualified retirement plans that the parents may have. The value of the family home is not considered in the FAFSA. The value of any small family businesses, and the value of any personal possessions and household goods like your car or appliances or boats or things of that sort. Those are not are not reported as assets on the FAFSA. But there are ways that you can shelter or reduce the monetary value of reportable assets. One simple way would be, since they're asking about the value of your assets on the day that you are filling out the application, if you plan to fill it out at the beginning of the month when you have already spent and paid your rent or paid for any other bills that have come in, mortgages, and that's reduced your amount of money in the checking account as of that day. You also should transfer any balance in a student checking or savings account to one in the parent's name. This is because the way the FAFSA does their calculation, they calculate that 20% of the student assets can go towards paying for college, whereas they only consider 5.64% of the parent's assets. So it's good to get things out of checking accounts or such financial accounts out of the student's name. If you transfer the assets close to the date that you complete the FAFSA, you need to document the change by printing out the asset value from the account's website. Otherwise, they're going to use what you had on your last bank statement, which would not be an accurate accounting of the money in that account. Okay, so the tricky thing about whoops, I didn't mean to do that. Tricky thing about a 529 savings account is that the balance in a 529 savings account is considered a parent asset, even if the account is in the student's name, but it's considered a parent asset and will affect the student aid index, that figure about how much the family is expected to contribute to covering college costs. However, the disbursement out of the 529 account is not an asset, nor is it a taxable student income if that money is used to cover qualified higher education expenses. And I'll show you a list of that. So here's the trick, though. The disbursement must cover the expenses exactly. So if your expenses are $10,000 and you take out $12,000 from the 529, the $2,000 will be taxed as income for the student. And it's you need to withdraw the money in the same year as the expenses are incurred. So you can't withdraw the money from the 529 account in December for expenses for second semester housing or tuition. So here are some of the expenses that are considered qualified expenses, and therefore what you take out of the account is not considered income. So if you use it for tuition and fees, books and supplies, computers for college expense only, room and board, special needs equipment, transportation and travel costs are not considered qualified expenses. That's testy little health insurance is not considered a qualified expense. Application fees or extracurricular fees are not. But you can use the balance from the 529 to start paying off student loans. So who gets the FAFSA? Well, in the application, you are given room to list 10 colleges at a time. And what you want to do is you want to list the most expensive private college first, then your top choice UC campus, your top choice Cal State campus, and then list your most expensive out-of-state college. This just assures that they will get this information right away and start being able to look at your file and start the process of looking at your demonstrated need. What happens? So you fill up the 10 spaces with 10 colleges. Each campus of the UCs and each campus of the Cal State is considered one college. So you submit the FAFSA, you get back a student aid report. And once you get your student aid report, they email it to you. That means that those 10 colleges have received the FAFSA. So now you go back into the FAFSA to change the list of colleges if you have more than 10 colleges that you're applying to. So you delete all the first 10 colleges, and then you start listing the other 10 colleges that you have that you're going to apply to. If you have more than 20 colleges that you're applying to, then you do the whole process. You wait until you get that second student aid report, which means that second group of 10 colleges has received your FAFSA, and then you go in and change it one by one. Now, if you're applying to private colleges, you're not quite done yet. You apply the FAFSA again, remember, is just for federal aid and can be used by California for their state aid. But private colleges also use a form called the CSS profile, and that's on put out by the College Board, and you can access it through the College Board just the way you logged in for registering for the SAT. Now, the deal about the CSS profile is that they do ask information about not only the 2021 income tax, but also 2022 income tax information, and also what you expect your income will be in 2023. It's required by more than 240 private colleges and universities. You can see the whole list if you go to the College Board site. There's free filing fee if the family income is less than $100,000. Otherwise, it costs $25 for the first college and $16 for each additional college. Now, this is a list. It's pretty, the print is pretty small, but I just wanted you to see that how much more information the CSS profile is asking than what the FAFSA asks for. So you need to have more information at hand as you're filling it out. One more thing, the UC requires only the FAFSA form, and its financial aid packages will include federal and state grants and scholarships, what loans you are eligible to take out, work study if you're eligible. And then the UCs also have something called the UC Blue and Gold Opportunity Plan, and that's for students whose family income is below 80,000, and it covers tuition and fees. And there's also the middle class scholarship, which is for students whose family income and assets are below 191,000. And that will cover anywhere between 10% to 40% of tuition and fees. So all these items, maybe not all of them, you may not be given the option for work study, or that you may not get all the federal or the state grants or scholarships, but and it will also have institutional the UC's own grants and scholarships. Now, life happens and things can change from 2021. And apparent income can be measurably lower in 2022. There are major medical expenses in 2022 or coming up in 2023. If that's the fact, and before you fill out the FAFSA, you can contact the financial aid college at each financial aid office at each college on your list to find out how you should proceed. They may have an alternative form for you to fill out, but it's important to make them aware of these changes so they can make note of it. And when they get the FAFSA, they can see that this, they have a note that things have changed since 2021. Once you get your financial aid package, you also, and things have changed, you also have a chance to appeal. You can appeal a financial aid offer by following that particular college's specific instructions for submitting appeals. And they will ask for specific forms that you need to produce. Interestingly enough, just this past year, I was working with a parent on the West Side who needed to apply for an appeal because the financial situation had changed. There had been a divorce and there are extenuating financial circumstances, and we very carefully contacted the financial aid office. The representative told us exactly what he needed. I assisted her in writing a letter to explain all the circumstances and why she was submitting an appeal. And the good news was that she got close to an additional $30,000 in financial aid. So it's worth it. So here are some important takeaways. The only people who really know about financial aid at any particular college or university are the people in the financial aid office, and they are there to help you. So if you have any questions, it's really, it benefits for you to call them and contact them, but you need to have completed all the forms and supply all the requested documents before you make the call so that you can, if you need to make a change or add additional information or to just ask a question. Now, the other, here is the prize. This is what a financial aid letter will look like. So here under scholarships and grants, you have the institution's own scholarships and awards and grants. It also includes the federal Pell Grant. There's another federal grant, which is an educational opportunity grant. You'll also be told if you qualify to take out the direct student loans, the subsidized loan for $3,500 or the unsubsidized for $2,000. This is divided into three because this particular college had 3 terms or on a quarter system. Then here's the estimated summary. So the total awards here are 62,559, but the total cost summary is 58,000. And so total scholarships and grants are 54,000, which means that the annual cost without loans would be $4,363. However, if you take the maximum amount of loans out, you would, you would be minus $1,000, which means that you only have to take $4,500 out in loans instead of the full $5,500. What's also good about this letter, they have a second page, which goes over various ideas. So about the books. So they didn't include the books in the or airfare, and this can add up to $2,600. It includes, which wasn't included, as you see, they only included tuition and fees and the double room. So you have to add that. You have to add down here, they didn't include the health insurance, so you have to add that. And then make your own calculations about how much you are expected to pay the colleges after, if you take the loans, if you don't take the loans. So what to do now? The current high school freshman, your base year is going to be 2024, because you're going to be filling out the FAFSA for 2026 to 2027. So you make sure and talk to your parents about, positioning themselves for filing the taxes. Talk about the assets and how to either move them or reduce them in some way. The current high school sophomores, your base year is 2023. And you do the same thing, prepare, ask your parents to be prepared for filling out taxes and discuss what the assets are. And just as like the freshmen, the sophomores should be researching outside scholarships. Current high school juniors, your base year is going to be this year, 2022, because you're filling out the 2024, 2025 FAFSA. And again, discuss assets and how you can move them, and also start looking for scholarships. The current high school students, one of the things you need to do right now is to go to that studentaid.gov website and register your FSA ID. A parent needs an ID and a student needs a separate FSA ID. And then start gathering all the copies for the 2021 tax returns, your W-2s, 1099s. Both the FAFSA and the CSS profile will be available October 1, which is just, almost around the corner. Start researching scholarships and contact the financial aid colleges. If the 2022 income is different than your circumstances in 2021. Okay. Now, one other thing that seniors can do is, and all the experts recommend that you do that, is that each college is required to have something called a net price calculator. And this one is for Connecticut College, my alma mater. And I put in some figures, and this is what the net came out for me if I were interested in applying for financial aid for next year for one of my kids. So the total cost that they come up with is $82,600. Yes, take a deep breath. But my student aid index that came out was $13,000. So my total need is $69,000. That's my demonstrated need, is $69,437. So what they estimate is in grants that I would get, not the entire Pell Grant, but I'd get a good chunk of it. I get the supplemental educational opportunity grant. There's a big Connecticut College grant that they estimate that they would give me, which means that after all these grants, that my estimated net price would be 17,613, not 69,000. I'm also eligible for work study, and I'm also eligible for a direct subsidized loan. So this all comes down to is that my estimated out-of-pocket cost would be $13,000. So now you have an idea if, you know, if Connecticut College is exactly absolutely where you want to go. You don't know if you're going to get in, but if that's where you want to go, then you can start making plans to, you know, of how that you would cover $13,000. So it's called the net price calculator, and every college and university has it. Okay, some of the questions that came in beforehand was, are there any free tuition colleges in California or the US? There are participating community colleges in the California Promise program. There's also a private school called Deep Springs in Northern California that is free tuition, but you work on the campus. The military academies have free tuition. Another work-based college is Berea in Kentucky, and there are many others like that. And the Ivy League and other super selective colleges would essentially have free tuition if you meet certain income and asset levels. So you go to the site, to the college, go to their financial aid website, and they will tell you that if your family makes below $100,000 or whatever it is, that it would, you know, 100% need is, they will support your 100% need. Another question is, where can you get help with financial aid applications? Well, certainly the Pali College Center is a easy and very knowledgeable place to go about the financial aid applications. There's a lot of, excuse me, a lot of information on the website studentaid.gov. There are a number of workshops that are given called Cash for College, and the College Center would have information about when those workshops will be you know, will be presented. And then, of course, Great Expectations is a resource to help with filling out those financial aid forms. Okay, so that is what I've got. I know that there was a lot of information, and this will be, this is recorded and will be accessible so that you can go back and get those lists of some of the colleges and things of that sort. And Jenna, were there any other questions?
Hi, thank you so much, Joyce. There are a handful of questions for you. Let me start. Can you explain again the difference between a discount and financial aid?
Financial aid is the general term of the money that you were given to help you pay the costs. So financial aid, it encompasses grants and loans and any discounts that they may give you, and a college may give you, but usually what it is that the discounts are part of the institution, various grants, or the institution scholarships and things of that sort. So it's just a way of financial aid is the general term, and they just, the discounts would be merit aid and things of that sort. Does that make sense? I'm not sure that,
Yes,
but yeah,
wonderful. Wonderful. And then when you were talking about the Cal grants, that's tied to financial need?
yes. It's
Okay.
tied to financial need, and it's also tied to the student's GPA. So
Okay.
what happens is that the high school will submit all the GPAs for the students into the system so that they can be part of, calculated in terms of the amount of the grant. The kids or still have to fill out the FAFSA because the Cal grant has access to that as well.
Okay, wonderful. And then the difference between a subsidized and unsubsidized federal loan.
Okay. Subsidized federal loan means that the interest rate is taken care of by the federal government for four years. So the interest for the student doesn't start accruing until 6 months after the student graduates. Unsubsidized means that the interest is building up during the 4 years and just becomes part of the amount that has to be repaid when you start repaying the loan.
Okay, excellent. And then when you were talking about the UC package, a question came up about something similar for CSU. Is there anything comparable or a way to explain anything that the CSU system
I
does?
have to look at that. I don't think so. I
Okay.
think, the cost of attendance at CSU is appreciably lower. There's certainly financial aid and grants and Cal grants that are there, but there isn't a similar program like the Blue and Gold, I don't think.
Okay, perfect. Thank you. And then the question came up when you were talking about assets and a person's primary residence. Do you know anything about rental properties and how that might play a role?
Yeah, they are rental properties, that becomes an income, that's in the income taxes. That comes in, the income from the rental properties is included in your income tax. So, and then the value is for the FAFSA is not included. I don't think, no, because it's just one is not included. So the value of the rental property is not included.
Okay. The CSS profile, is that every year or just once in the beginning that you fill out?
It is just once, and then if there's any changes, they have a thing, they'll send out about, is there any change to the CSS profile? I think you have to update it, but you don't have to go through it all again.
Okay, excellent. There are still more coming in, so I'm going to keep reading them, but just so everybody knows, I'm seeing them all going down the list. Our contact info is up on the slide here. If there is any other follow-up or further questions you'd like from us or from Joyce, you can feel free to use that as well. But we're gonna keep picking Joyce's brain here a little bit. You mentioned parents being divorced and utilizing the one parent's financial demonstrated need. Does a step parent ever factor into that, or is it the?
Yes, yeah,
Okay.
if the step parent, if they're married and they're living together, then
Yes.
the income of the step parent is factored in.
Okay, excellent. Merit scholarships, any great tips on where to look for those or resources for merit scholarships?
No, the scholarships, there are sites, scholarships.com or whatever, that you can access to see individual, scholarships if you're Irish or if you're left-handed, or those kinds of scholarships. The merit scholarships per for each institution will be on that website. So when you're looking and researching a college, you certainly should see what merit scholarships, if any, they do offer.
Excellent. And when do the award packages typically come out from financial aid?
They for regular decision applications, you will get the package at the same time. So that would be April 1. The UCs, usually the package will come again when you're notified about your admittance. However, it doesn't always happen that way. There could be something that was holding it up. You always have to check your student portals for every college, because they may be communicating with you saying that there's something missing from financial aid and they're not able to process your application. So you need to stay on top of it, because that can hold up the release of it, of the amount of what the final package is. If you are applying, that's one of the things that if you're applying early decision, early action, a lot of times you're not going to get the financial aid information because you haven't either submitted it or there's something else is holding it up. However, if some of those schools obviously are meeting 100% of what your demonstrated need is, then you have an idea of what they will cover and what they won't cover. So
okay.
Yeah.
Okay. There's a few questions about if someone is looking into using a financial aid advisor or consultant. If you have any tips on what they might look for, what to maybe ask a potential financial aid advisor on, if they're, what I'm gathering is if they'd like to use someone to help in the process. And then I guess what's any advice on the level of financial advice? Where does it cross over into like a certified financial person if we're talking
right.
I
mean, there are two different aspects of this. I mean, I think that getting financial advice about how to structure your assets is different than having someone help you actually fill out the application and making sure you're answering the questions in a correct way, or not giving information when you don't have to. So certainly when you're talking about your finances and your assets, I'm not qualified to recommend financial advisors in terms of stuff like that. But the people who are in the business of counseling families and students in college applications should have the ability to also help you in filling out the application.
Wonderful, wonderful, perfect. What about if somebody did not do a FAFSA the first year, can they do it the second year, or is it only?
Oh yeah, no, you've got to actually, that's a very good question, is because you need to fill out the FAFSA every year.
Okay.
So yes, if you didn't do it the first year, you can certainly do it the second, third, or skip a year or whatever. But if you want the financial aid every year, you need to fill it out every year.
Got it. Okay, speaking of every year, if you receive your financial aid package, does it mean you'll get the same amount, assuming there's no change? Or I think that goes along with your answer there, that you have to fill it out every year.
Well, you have to fill it out, but it's a very good question. Is that that once you get the package, you should ask them, can I expect the same kind of financial aid? And there could be a grant in there that's just for freshmen. that's, has a different name on it, but that's absolutely an excellent question to ask, once you've decided if you're going to accept the package and if it's going to be good for the following 3 years.
Okay, excellent. And I've got one more for you, Joyce. You mentioned the UC middle class program. What assets do they consider? Are there differences there than some of the other areas that you've mentioned?
There's been some change in looking at, the middle class scholarship program, and I would like to get back to you on that, if what assets they're looking at. I am assuming that since the FAFSA is the only thing that you need to fill out, that they are looking at whatever assets are reportable for the FAFSA.
Excellent. That is the end of the list of questions for you that came in, Joyce. Thank you so much for answering all of those at the end. And thank you to everyone for submitting questions and listening through the presentation. We greatly appreciate your time tonight. Thank you for joining us. Any further questions, resources, help that you might need, the Pali College Center is a great resource for you. And then here at Great Expectations College Prep, we have our information up on the slide now. If there's anything else we can do to help you, we are here as well. But thank you so much, Joyce.
Okay, well, it was a pleasure.